All right, everyone. Coming up next, Chain Reaction, Africa's trading going digital. These sessions explores how digital rails, stablecoins, tokenizations, and on-chain tools could reshape financial services activities across the continent. Please meet our moderator, Paul, and his panelists right here, and they are going to discuss a lot about this today. So let's wait no longer, and please give them a big round of applause.
Thank you so much. Good afternoon, everyone. Welcome to the discussion on the chain reaction, Africa's trading going digital. As we know, Africa is a region where, for most of us, when you want to settle a trade, it can take anything between 5 to 9 days to get it done. And many assets and trading instruments, they are very much inaccessible to the average person. And there's clear evidence that on-chain tools which are now available, they look more or less like a trend and basically something that could actually be useful. And I think in our midst this afternoon, we've got brokers, financial intermediaries, and infrastructure builders, whether you're fintechs or you're regtechs. The question, therefore, is when we look into the digital space in Africa, from stablecoin to tokenization, what are the building blocks around it, and what works and what doesn't work? And we have got a great panel this afternoon. On my left, we've got Ben Ensley from the UK Department of Business and Trade, and we've got Shelley Haverman from Vala. That's one of Africa's leading crypto and payment service providers. And then we've got Isabel, who is the Commercial Chief of Staff for BVNK. And on my extreme left, we've got Ansel Adams, who's the founder and CEO at Dominion Investment Holdings, also a member at Africa Blockchain Institute. Welcome. I'm going to do it a bit unconventional. I'll start with you, Isabel, first, if possible. It seems like do we have a broken status quo in Africa? So basically, what does institutional adoption of on-chain finance represent? What does it look like in Africa compared to Europe and other regions, for example?
So I think there's one clear theme when you're looking at Europe versus Africa, and that's in Europe, you're really looking at optimization. So they're looking at on-chain finance as optimizing payment flows. And you can see that this is really evolving through the new regulations that we're seeing in Europe through MiCA, for example. And that's really driving adoption. When we think about Africa, it's more of like fundamental utility. So it's really being used to actually have access to things like digital dollars, and in volatile markets, being able to get money in and out of Africa. I think that's probably like the clearest definition. You're definitely seeing Africa as, although it's earlier on in the cycle, it's definitely catching up. We're seeing castes being awarded, and we're definitely making great progression, but I think probably Europe is a few steps ahead in terms of the actual adoption and execution of that.
Okay. So maybe Ben, obviously you're representing His Majesty's government. From your view, how does the UK investor, therefore, and the UK government currently view the fintech opportunities in Africa? Where do they see the strongest opportunities and the partnerships for growth?
Thanks, Paul. Really good question. So I think where I come at this is my job and my role is to support UK companies looking to kind of trade and invest with this continent, but also looking at African corporates and African startups and fintechs, looking at how we can support them and support them back in the UK. And so actually in this space, we see a huge amount of potential, right? Whether it be physically in this room, whether it be in what's coming out of Lagos, whether it's what's coming out of Cairo or wherever else right across the continent. And I guess what we think sets the UK apart from kind of other countries and other constituencies is actually, for us, this is about sort of a partnership, right? And this is about how can we help startups and scale-ups think about how they can go beyond their home country in order to look even bigger and look even better. A little bit back to your comment about kind of where Europe is on this kind of journey. And so maybe there's just three kind of things I would point to. Is first of all, just actually the tech hubs that we have existing already across the continent. One here, one Nairobi, and one Lagos. And their job is to help build an ecosystem, whether it be through accelerators, whether it be networking events, things like this, in order to help startups, founders, depending what stage you are at, in order to access that system that kind of the UK has. The second bit is then our Global Entrepreneurs Program, which is a program that we run, again, aimed at scale-ups who might be, doing really well in your host country, but looking to think about how can you go international. And that offers visa support, that offers introduction to the right financing, that introduction to the right founder circles, ecosystem back in the UK, so you can think about how you kind of scale up. What that is not about, to be very clear, is kind of taking African companies out of Africa and sticking them in the UK, right? It's about win-win, right? How can two things be true at once? And we can think about how we can help African corporates kind of expand. And then the other bit, and maybe this is just a bit of a pitch while I've got the microphone, is then events that we kind of run on our side. So London Tech Week in 2 weeks' time is one of the biggest, if not the biggest, kind of global tech event on the continent. And actually, we will take about 100 African founders and startups back to the UK, many of them from the fintech space, in order to connect them into the right ecosystems to think about how we can continue to help them scale and grow. So for us, it's about really helping African corporates, African fintechs and startups think about how they can go to the next stage on their journey and go even further in where they're trying to go.
Okay, that's quite interesting. But then maybe a natural follow-up question to that then would be, we've got great technology, I think we all agree. The question is, who are we solving for? I want to bring Ansel on that. Like I see a smile on your face because I did a little peek onto your LinkedIn page, and the statement says, sell the problem you solve, not the product. So clearly we've got a good technology, but we don't seem to have the correct deployment strategy, perhaps. And I guess the question is, beyond the normal settlement delays, the retail traders often they can't access those instruments, whether it be foreign equities, commodities, alternative assets. We had an interesting discussion earlier on about tokenization in the townships, for example. Is this an infrastructure problem? Is it a regulatory problem? Where do you see the problem on your side, Ansel?
Thank you very much. I think the issue of a chain reaction needs to be understood a little bit better. So the question is really who's part of the chain and who's not part of the chain. And so I've been sort of spending some time walking through these the conference, and most of these solutions are really designed for a very small percentage of people on the African continent. So if you understand, the South African economy, and the South African economy having a very defined dualism of a formal and an informal economy, you can understand why, having spent the last 8 years building digital ecosystems, my thinking around technology is that its high failure rate is because of a profound lack of understanding the complexities where the need actually is more prevalent. So when you look at what's happening here, these are solutions that are designed for shareholders to make more money, for governments, European governments, to prescribe to us in Africa, how to participate in this fast evolving environment where actually, we should be developing digital tools that are based on the lived experiences of those that are in Africa. And you don't see it here. What you see here are developers from a first world perspective, policy developers from a first world perspective, that has a very limited view of what's happening on the floor, where, for example, more than 800 million Africans are excluded from what you're seeing here. And the real question is, how do we address that? How do we get to a point where we begin to understand what that real need is, and how we don't sell technology as what you're seeing here, but how you sell the actual problem that you're solving? And I'm not hearing this efficiently here. I don't see that there is a proper understanding, of that issues here, but it does allow for a brilliant opportunity for understanding what Africa really needs. And, I'm looking forward to sort of engage with the panelists to understand exactly what their thinking is, for a British government perspective, private company perspectives, what their understanding is of what the real need and issue is. I'd really understand, because I don't see the majority of Africans being part of this chain reaction we are talking about.
All right. Now, as you're talking there, what comes to mind is we always use this word DeFi. And I always say DeFi in this context is not your favorite refrigeration brand, but decentralized finance. The question is, when you talk of decentralized finance, do you think about the average youth on the street? Because we are decentralizing for them. And maybe let's bring in Shelley here, because with Vala, you guys are quite good with regards to your payments. And then the question of liquidity comes in. It remains a major concern in many African markets. And the concept of tokenization is now coming in. And the concept is that it must improve liquidity, hopefully. Is it true that it can improve liquidity, or maybe are we just introducing new risks into this ecosystem then when we tokenize?
Yeah, very good question, and I relate to a lot of what you're saying. I think tokenization definitely adds to market access and market efficiency. So that definitely is true, but I think the question of liquidity still comes into play, right? What we're talking about in terms of efficiency and market access, we're talking about fractional ownership, we're talking about 24/7 access to markets, faster settlement, but that all doesn't translate into liquidity itself, and we shouldn't confuse ourselves with that. So the risks that really translate here is we're still thinking about the depth of liquidity, right? We're still thinking about fragmented liquidity pools. We're still struggling with the elements of all that. So I think, yes, there's the element of bringing market access and efficiency to the table, but we have to consider the other risks and the other operational issues and questions that still exist, that in itself, tokenized assets cannot address on their own.
Yeah, but then the question is, who should take the lead there? Is it central government, private market players? Because I think at the moment it's like the jungle. Everyone is busy making up their own rules. Maybe you can continue on that. Then I see there's an intervention coming from the ears. Quickly.
Yeah, I think in Africa, exactly Tanzil's point, it's very different to European context. I would say in Africa, it's very relevant to consider these things as a hybrid solution, right? We have, when we're talking about liquidity, the liquidity of a tokenized asset doesn't exist without a market that needs to buy and that wants to engage in this. So it just is an academic construct, really. So in Africa, we also have a very healthy fintech environment. We have an ecosystem of builders that are interested in understanding real problems. We also have the real African context in terms of local on and off ramps, all of the things that together work in its favor to adopt a new technology. So I think definitely hybrid, and then of course you have the regulatory construct that impacts how people view digital assets, generally speaking. How does the regulator consider ownership and all of these things? And I think it's really a combined effort between regulator, governments, and the market players in the fintech ecosystem that build on top of Rails.
Interesting. Ansel, you wanted to come in there, and as you come in, I want to further compound the issue by checking, do we have real examples in Africa where success stories, it could be at the scale, it could be at the local level, because, Shelley has clearly articulated that there's no liquidity without a market. So the question is, where's the market? Are there opportunities? Is it big enough, or we just, it's much ado about nothing?
I spent the last 8 years working in agriculture, working in mining, working in healthcare, and then interestingly, looking at the halal economy throughout Africa. And I worked with two very successful and global blockchain solutions. One is a blockchain solution called Ag Unity, it was digitalizing the coffee trade in Africa. And the other one is a blockchain solution called MineSpider, that digitalizes the mining ecosystem so that rare earth metals that are exported into Europe are fully traceable. But let me just come back to South Africa again. agriculture in South Africa has the ability to create substantial amounts of sustainable jobs. But at the rate it's being currently managed, from a policy development perspective and also from a private sector perspective, is that 2.5 million smallholder farmers are not commercially viable, right? But you can imagine that if you understand that the current reality in South Africa is that we're trying to fix and transform a first world economy that's been failing as an apartheid design economy since the mid-80s, that we're not nearly close to understand what kind of tools in a digital context we can develop to actually address that. So a future South African economy is an economy that is integrated, or it's an integration of the formal and informal economies using digital tools like blockchain and AI. And one of the most prominent sort of examples of how to understand that is the agricultural space. So imagine that you look at the cattle industry, which is what we've done. So we can track and trace a piece of meat from the day the animal is born all the way through to when it's consumed in the marketplace, attach to that a dynamic QR code, and engage the market on where this piece of steak is coming from. But in the Eastern Cape, for example, you have very successful white formal economy cattle farmers that needs to grow an animal for about 30 months, without having any cash flow before it's being slaughtered. But around this farm of this white farmer are thousands of informal economy stakeholders that are unbanked and underbanked and are sleeping with thousands of rands of cash, under their beds. Now imagine that farmer comes to them and we say to this farmer, we can actually tokenize this piece of animal, this cow, on day one. And let's say that this animal is tokenized and it's worth 1,000 rand.
Yep.
But we're going to fractionalize it into 10 pieces. And we're going to allow informal stakeholders to buy for 100 rand a portion of the cow. Now this cow then grows under very high quality mentorship and farming mechanisms under this white farmer. And after 30 months, when it goes to slaughter, it's worth 30,000 rand, which conceivably and academically means that 100 rand has grown to 3,000 bucks. Now, if you put 100 rand in Capitec, who recently announced their shareholding as the most expensive shareholding price in South Africa, 100 rand will not grow to 3,000 rand in 30 months.
Not even in 5 years.
As a tokenized asset,
Yeah.
and then having an integrated AI solution, you can actually track and trace the progress of that fractional portion, and you can enable the owner of the fraction to use an AI algorithm to actually trade with it. Now, if we understand that in principle, we can understand what a future digital economy of South Africa may look like, and how we can use these tools to actually integrate the formal and informal economies in South Africa. But we're not there. Because the thinking of those who develop these tools, policymakers of European governments, they actually don't care, first of all. And second of all, they don't understand that complexity. So who is part of this chain, I think, is a critical question. Who is this that you see here? Who is this designed for? And why does it not speak to more than 80% of Africans that are excluded from this process that's so fast evolving?
If I can come in there, it seems your argument then, brilliant analogy, but we don't have enough partners, maybe, which leads me back to Ben. The UK government has been a partner in African trade for a long time. And maybe from your experience, what is the role of international financial centers in all of this? How can we harness multilateral partners, be it in Africa, globally, to harness the kind of energy that is required to achieve what Ansel is talking about here?
So I think it's worth sort of stepping back a little bit. I'll talk about the UK and then sort of come and answer your question. So the UK tech industry is worth about $1.3 trillion. We employ about heading towards 2.5 million people, and we are the second largest largest tech ecosystem in the world after the US and China. And let's be honest, we're quite a small island, and we've only got 70 million people, right? So we managed to do that. And I think that speaks volumes about our sort of talent, our education system, and our kind of open regulation system at the same time. But I think why that's really important to this context is because we really see ourselves as a springboard. and kind of an enabler for kind of tech firms to grow and scale, both from Africa, but at a global level. And actually, what do I mean by this? Let me bring it to life a little bit. I was in Tunis about a month ago now, talking to a whole different range of kind of fintech firms. One of them was had just set up their headquarters in the UK, in kind of the cybersecurity space, in fintech. And why had they done that? Because they want to expand a little bit into the UK, and they see the potential for 70 million people. But actually, what they really want to do is go global. First by going into the Middle East, and then thinking about what that looks like after. And I think that's what the UK offers. It offers a springboard right across the globe. Deep pools of capital. You know, if you look at the numbers on VC, I think about 25 billion was raised last year. That's 2/3 of all Europe's VC funding was raised in the UK. And I see my job and my team's job is to be an enablers to that, to think about how we can help African firms, African startups, African scale-ups kind of access that and think, how do you go global? I was at the CEO forum last week, and someone on a panel at one point, it wasn't me, I wish I'd made this sort of smart, what I thought was a smart comment, but it was someone else, made a comment about, you will never meet a corporate that hasn't gone global without global capital or finance in it. And I think that is exactly the enabler and the support that we on the UK side can bring.
Wow, okay. That's a very interesting take onto this. So it seems like there is a way out of all. But my conundrum perhaps would be, we can't achieve what we want to achieve without payment solutions and payment rails. I want to bring in Isabel here because, well, it's public knowledge that your organization, BVNK, has just been bought out by MasterCard. $1.8 billion. Well done for that. I think when the transaction concludes, please, you can call me. I might want a piece of that. And when that transaction was announced, you made a comment which said this partnership with MasterCard is a huge milestone. And it says it's a signal that stable coins are becoming real, credible payment infrastructure. The question is, why do you think stable coins are credible, and how are stable coins becoming a genuine treasury and settlement tool for businesses operating across borders?
Absolutely. Look, there's lots of exciting things happening at the moment in the industry, and I think what's really exciting is stablecoins is moving away from a crypto product that people see as risky or see as a bet. And actually, it's really become a legitimate payment rail that is being really backed by the likes of huge enterprise banks and businesses. I'll give you a quick example. JP Morgan, for example, creating their own JP Morgan coin for exactly this reason, to utilize their treasury and liquidity flows. And this isn't just a pilot project that they're doing. This isn't just, you know, a concept that they're trialing. They are now using this on a daily basis. And there's about $1 billion going through their treasury system on a daily basis now. And where BVNK comes in is that, look, we recognize it's a luxury for these companies to be able to create their own stablecoin and then utilize it in their treasury flows. And BVNK can offer that tech stack for small to medium and actually enterprise companies too, to be able to utilize that flow and unlock that treasury so that it's not stuck, it doesn't take days, and actually it's instant globally for all sizes of businesses. And that's really where we are seeing sort of the movement there.
Okay. And maybe, Shelley, if you could come in there. On your platform, you do have a lot of corporates coming on board, some quite successfully. Now, to Isabel's point around stable coins, the question is, for those who are not adopting that, what's the problem? Is it compliance anxiety? Is it technical capacity? They just don't understand what's going on? Or there's just no viable commercial incentive or financial intermediaries to tap on the stablecoin market?
Yes, I think it's a little bit of all three, to be honest. But more importantly, I think it's operational concerns mostly. And then I'll put the spotlight a little bit back onto Africa. I think in global context, yes, it's way easier to drive the adoption. It's very obvious. I think most institutions understand the theoretical benefits, just as Isabel explained: faster settlement, 24 access to markets, all of the good things that we all know about. But in the African context, I think you're still operating within the limitations of local rails, fragmented system across the continent. And that's actually something that we specialize in, is to say you will always have the problem of local access to local payment rails, things like mobile money, to facilitate the initial on-ramps and eventually the payouts in local currency. So stablecoins is amazing. As a technology, it's now been proven, but I think it still has to operate within a system that is sort of locally regulated and locally operated. And that includes the monetary aspect of it, so on and off ramps, the movement of local currency, but also things like the regulatory concerns that institutions still have. You know, how does the regulator look at the money flows when stablecoins are involved? You know, what does my settlement windows look like? How do I manage reconciliation? How do I account for this in my accounting systems? So really the question becomes for us is like, how do we give comfort to institutions around those operational questions whilst optimizing and giving them access to the very real benefits of the technology itself. So it's less about the technology. In fact, if we can abstract that away for institutions and help them solve their very real operational problems, I think it really pushes the adoption of these technologies way faster than anything else could.
I'll take a comment from you as just after Isabel, because I see you nodding there. The question is, are your businesses saying the same thing as what Shelley is saying? What is their number one requirement from a digital infrastructure payment perspective?
Sorry, I didn't hear the last bit.
No, the question is, the businesses that are in your environment, are they requesting the same thing that Shelley is talking about? So the question is, what are they demanding in terms of the digital payment infrastructure? Before I come to answer, yeah.
So, look, businesses aren't looking for some sort of magic trick. They're not looking for these fancy technology. There's never been a sales pitch that says, come use our product, our tech's really complex. Like, that doesn't happen. Actually, what businesses are looking for are for it to be simple, for it to be safe, for it, for compliance to be top of mind. If you're integrating into a company's payment stack, you want to know that compliance is the most important thing and you keep up to date with your regulations. They want to know that your payments are going to get from A to B, they're not going to be stopped, it's going to be instant, and that you can trust that that's going to happen time and time again. And what I think is increasingly important is this interoperability of being able to offer both fiat payments in your traditional rails and stable coins. I mean, one's not better than the other necessarily in certain payment flows. And so you shouldn't have to go onto one platform to be able to offer traditional rails and another platform to be able to utilize stablecoin rails. They should all be offered in the same platform, and a trader or whoever is making that payment is able to go on and make that decision and choice for themselves.
Okay, so there's clearly a policy gap here. Anzali, you are with the Africa Blockchain Institute. Yeah. Talk to me about policy.
Well, the first thing I want to say is that what I'm listening to and what I'm hearing is not any difference of any differences in what has been happening over the last 100 years in Africa. Yeah. All that's happening here is that the technology that's being developed, that's being executed upon, is executed in a manner to maintain, the African disempowering, economies that exist currently. I don't hear any solutions that can make it easier for a smallholder farmer in Kenya or in Mpumalanga of South Africa to actually access and be commercially more viable in its current form and format. Right? All I'm hearing is a maintenance. If you talk about MasterCard, when you pay money from Cape Town to Cairo, it goes through I don't know how many intermediaries. Question is that changed? Has that been eliminated? Because for a smallholder farmer in Kenya, it means that to do business is still very expensive. So how do we address these issues? How do we, for example, when you see this concerning thing that's happening in the Boerkaap, when people can't afford to live in their houses anymore because foreign nationals, European foreign nationals that use these technologies are buying up property, raising the rates and taxes, and are forcing these people out of their houses. What kind of solutions can be developed, for example, because these are real issues. And I'm not seeing and hearing all I'm hearing and seeing and observing here.
I tell you where we're missing it. There's an infrastructure gap there, and I would want Ben to come in maybe. What gaps should we close in Africa to be able to get to the... I mean, the UK has been pretty successful, firstly as part of the European Common Monetary Union, and then on its own now with Brexit, to close these gaps. What should we do from an African perspective, infrastructure-wise?
Yeah, so I don't necessarily disagree with sort of Ansel and kind of the scale of the challenge, right, and how we kind of bridge that right down to kind of the farmer in Mpumalanga or wherever it might be. I guess the way that I see it is through two kind of different prisms, kind of a short-term prism and kind of a longer-term prism at the same time. And I guess a little bit about what are we therefore doing in that space. The short-term prism is about helping companies and helping the regulation and the policy-making space in order to let companies access that environment. So to add a bit of color to that, two UK kind of fintech payment platforms, huge regulation issues both in Nigeria and South Africa. We worked really closely with the central bank in order to kind of work that through. It was as complicated as you can imagine. And those two payment platforms are now available, or will be soon to be available, in Nigeria and South Africa. And actually, what does that mean? That does mean now that the farmer in Mpumalanga can send money to Nairobi or wherever it might be at a much lower margin on what that was, two or 3 months ago. No, is it perfect? Is there still market? No, not at all. But
we're not seeing it.
This is a journey, right? This is a journey. The other bit then is longer term, is the Africa Continental Free Trade Agreement. Now, we all sort of know the complexity of that and the challenges that brings, but I think we all sort of see the potential at the same time. And we on the UK government very, very much see kind of the potential about where that can go. And actually the digital protocol and the digital pillar within that, we have put quite a lot of money and quite a lot of technical capacity and skills building into it in order to think about how you can foster and how you can create a single Pan-African digital payment platform across the continent and what that looks like. And some of the modeling and numbers that we've looked at have said that you're looking at about a 25% reduction in costs if that comes in. When that comes in, I'll be more positive about it. Now, is it complicated and are there a huge amount of things to work through? Yeah, of course they are. But actually we are very much optimists in this space and kind of see the huge potential, which maybe just to close off goes back to the point I made earlier about how we really see this as kind of a partnership, right? And actually joint working together. And this is not just what is good for the UK. This is about what is good for both the African continent and the UK and how we can think about sort of taking all of us going on that journey together.
All right. Unfortunately, I'm out of my time here. I'll just ask Shelley to make a final word because when I woke up this morning, I decided to put this pin, Ubuntu Humanity. The question is, at the center of everything we talk about, there's a human being involved in there. And Shelley, your organization has committed itself to, and I'm quoting here, advancing a just financial future that upholds human dignity and the unity of mankind. Now, the question is, if you had to pick just one payment or settlement innovation, not the most exciting, but something that is most relevant to human beings, the question is, what is that innovation that can scale for Africa in the next 3 years, and why?
Maybe before I get to answering that, there are some real-world examples, right, of these problems being solved. So, for example, at Valor, what we do is we enable payments providers to access local liquidity, so African liquidity, so that the farmer in Kenya can deposit money into our platform and move it to, for example, an importer in South Africa. So that's one example, of how we are doing it. Not at scale yet, as Ben said, but it's a real use case, and we're really trying to work on that. And from an institutional perspective, I agree with you. I think often it is enabling institutions to be able to build on this infrastructure that we make available to them in a very efficient way. So maybe to your last point is, what do I see the innovation being? I don't really think that it is crypto or stablecoin rails or any one technology as such. I think what it really is to make this infrastructure, this hybrid infrastructure that combines local rails, with instant payment systems, with stablecoin infrastructure and local payouts on the other side, available to the broad spectrum of ecosystem players who are building on top of this. And I think the real winners in this context are the ones who are going to use that infrastructure to solve real problems in Africa and make it available to the man in the street as much as they possibly can. I would love for us to solve all of those problems ourselves, but that's not our business. our primary focus is to say, how do we make this technology available in the best possible way so that other ecosystem players can build on top of our rails to give broader access?
Maybe just a comment.
In 30 seconds, because my time is up. In 30 seconds.
I don't think the answer is in making it available.
Yeah.
I think the answer lies in how it's designed. And that must be based on understanding and involving the lived experience of the so-called beneficiaries. And that's what's lacking.
It's all about our lived experience as human beings. I would have loved to take questions from the floor, but unfortunately, because of my time, we would have to call it a day. Just to thank our panelists. I'm sure we could have gone on for the next 4 days discussing about this. So much wisdom. Let's appreciate our panel. Thank you so much, everyone. And let's look forward to reclaiming our position as Africa and then participate fully, meaningfully in the digital space that we are existing in. Thank you so much. Have a blessed day.